We're talking outlooks right now with Mickey Fulp of the Mercenary Geologist. He's a speaker here at the San Francisco Hard Assets Show. Mickey, thank you so much for being with me.
Thanks for having me once again, Daniel.
Absolutely, Mickey. So let's talk gold for a second here and what you're expecting within the next 6 months.
Well, I don't know what's going to happen in the next 6 months, but I'm pretty sure that the price of gold at the beginning of 2013 will be lower than the price of gold at the end of 2013. And that's about all I'm willing to say. Okay. But that's happened for the last 12 years.
Okay,
so
gee, Mickey, I thought you had the gift of fortune telling.
No, I don't have a crystal ball. There is one analyst who's pretty infamous for walking on stage with a crystal ball. But I'm a little bit more scientifically based than that.
All right. Well, let's get your general sentiment of the metal markets right now. Mickey.
Yeah, and it has to do, I would probably expand that. I think the metal markets are in a holding period right now.
Okay.
The economy is not good, it's not bad, it's kind of in the blahs, so I expect metals to hold within the fact that, especially industrial metals, but we would expect gold and silver in the longer term or the midterm, let's say in the next year, to go up because of fiat currencies.
Okay.
More concern with me would be what's going to happen with some of these junior resource stocks. And what we've seen post-Obama election is a massive exit from investors and speculators, basically partly due to the fact that we have these pending tax increases in the United States. So we combine that with a tax loss season, lots of losses taken over the last year, and people trying to balance their portfolios. So I expect, especially the junior resource sector, to continue on the downtick for the most of the remainder of this year.
Yeah, let's just pause on that a second, because that's the sentiment I've been hearing from Brent Cook and other guys that it's going to be another bearish year for the mining stocks, 2013, especially for the junior sector, Mickey.
Well, I'm going to look much shorter term than that. What I'm trying to do is manage a portfolio for tax loss season. I've made the decision this year to end up with zero capital gains, both short-term and long-term in the United States. So I'm selling dog stocks. We all have dog stocks in our portfolios, deadwood, whatever you want to. I'm going to cull some of those. And what I think we're going to see is a downtick in the market until this tax loss season is almost over. For Canadians, a week before the end of the year. For Americans, it's exactly on the last trading day. But generally what we see is a low around the second to third week in December, and then the market will muddle along a little bit. And then what I'm expecting is a rebound right after the first of the year. And I'm using analogies of 2008, 2011, much similar years in junior resource sector. So somewhere around December 15th, third week of December, start buying some of your favorite stocks that are beaten down. And then after the first of the year, some of your good profits, perhaps longer term holds, you want to take profits as this uptick happens at the first of the year. That's my strategy.
Some good thoughts. And just finally, Mickey, so heading into 2013, what metals are you liking right now in your portfolio?
I always like copper. Gold is always going to be a good in your portfolio. Uranium's the most beaten up commodity on the planet right now. I'm picking away at uranium stocks because, as a contrarian, I like to buy when things are down.
Okay. Good thoughts today. Thank you so much, Mickey.
Oh, thanks a lot, Daniela.
And thanks for watching our coverage from the San Francisco Hard Assets Show. We'll have more for you on Kitco.com. In the meantime, you can email me any comments or questions at newsfeedback@kitco.com or tweet me at Daniela Camboni. Thank you for watching.